Hello, I'm Terry, and today I'll be calculating the last 12-month calculation, or LTM. And the first thing you need to do is gather your data. So I gather my data from the SEC website, the Securities and Exchange Commission. They have an EDGAR filing system where all publicly traded companies are listing their data. They have to turn it in at a certain time of year, and the SEC will put it on the website to have it available for whoever wants to view the financial statements. And I actually retain information from 5 statements. I have the most recent 10K, the annual report, and I have the first quarter and the second quarter of 2015, and also the first quarter and second quarter from 2014. And what we are looking at now is the second quarter for 2015. The date is here. And from this particular financial statement, I would record the revenues. I will retrieve that. Also, I will retrieve the EBIT, the earnings before interest and taxes, and that would be here. And I also retrieve the net income, which is here, the net earnings. And now for the EBIT, I need to add it to depreciation. I showed you EBIT up here earlier. So I would take this amount and then go to my cash flow statement. Now we're leaving the income statement, and I need to get the depreciation number, which is here. And I add those up, and I will have my EBITDA. But that's a little from where I got my information, and we just viewed the 10K of the second quarter of 2015. So that's where I put my information here: the revenue, the EBITDA, when I added the EBIT and the depreciation, and the net income. So now we're going to calculate the LTM for revenue, EBITDA, and net income. And you start with the most recent 10K. Even though it's 2015, it actually lists everything from the previous year, starting January 2014 through December 2014. And all I would do is add my quarterly amounts, the most recent ones, and then just subtract the older ones. And that's my LTM, and I'm just going to copy this formula down, and there we have it. And LTM is very important when it comes to valuation because it shows the most recent activity, operations of a company, and you need those numbers to compare to other companies. Like in evaluation, you will have the LTM, then you will have 2 projected years afterwards. So that's a little of the background about that. And the whole period that I have here, it goes from July 31st, 2014 through June 30th, 2015. That pretty much sums up everything for the LTM calculation. Thanks for watching, and stay tuned.